What will financial technology look like in the future? Well, chances are it'll probably look a lot like SOFI, which is why I believe that SOFI is going to be one of the most important stocks of the decade, and I'll explain why. Also, if you're someone who's been eyeing SOFI for a while now and wondering if it's time to finally buy, or if you should wait, I'll get into that as well. Because let's be clear, SOFI is a stock that has been decimated this last month, dropping 33%, which, don't get me wrong, I know this can be discouraging, but just to be transparent, SOFI is one of the stocks that I hold in my main portfolio, and I don't plan on selling anytime soon. Okay, so there might be some people out there that are skeptical of SOFI because it's still an early company, or maybe some people are biased because it was a SPAC that Chamath brought to the spotlight. But trust me, if you stop thinking about SOFI as a stock and start seeing it as a business, that's where this one really starts to get exciting. SOFI is one of the companies that is paving the way for a new age in banking, and truly has the potential to be the next Amazon of the FinTech industry. Which I get it, I know it's a bold claim, but hear me out. Basically, if growth is what you're after, I think SOFI is going to reward investors very handsomely to those who end up holding this for a while. And even if you are still skeptical about SOFI's potential, I think by the end of this video, you'll see why SOFI is, at the very least, worth putting on your radar. In short, SOFI is a disruptive fintech platform. And I know disruptive is a term that has been thrown around a lot lately, and it's basically lost all meaning, but hear me out. SOFI truly is a disruptive company because they're approaching the concept of banking from an entirely different angle by giving users access to an app that basically has any kind of financial service you could ever want, all baked into one platform. So whether you want a checking account, savings account, a stockbroker, crypto exposure, or loans to name a few, SOFI will cover you. SOFI is offering investors the opportunity to own their stock in a disruptive, holistic fintech platform where customers can enjoy their digital-first ecosystem. Which is important to note because a lot of banks today were designed the other way around. They were around before the internet, and recently they had to adapt to create apps and integrate. So you can call SOFI what you will, and that could rightfully be a financial services productivity loop. Moreover though, SOFI's strategy seems to be working as they're bringing in a ton of new customers. In fact, SOFI more than doubled its members to about 2.3 million just over the past year. But there's more to SOFI than that too. SOFI is of course taking advantage of the growing neobank market and capitalizing on other fintech companies' needs. SOFI's Galileo product offers critical application programming interfaces, which you might better know as APIs, for a range of digital banking functions. And guess what? It's working. Galileo's base reached 70 million and counting on the back of the quarterly growth of 130%. And what's more, the momentum still seems to be ramping up from the prior year, as the same quarter produced a 75% rise in client members. And that's not all. SOFI is also seeing record sales, solid revenue growth that's expected to increase to another 58% this year, and their EBITDA turning positive this year. And all EBITDA is their earnings before interest and taxes are taken into account. So essentially, it's just another measure of the company's overall financial performance, and in some cases can actually be used as an alternative to net income. So all you need to take away from this is that SOFI is continuing to grow and pull in new customers year after year. And if that wasn't enough, SOFI also filed for a bank charter this year. The application is expected in November, and if approved, should prove as a significant win for investors. And you also have to keep in mind, SOFI has been doing a lot of advertising lately to bring awareness to themselves, mainly in commercials as well as in sports arenas. So I think the bottom line is, The exposure SoFi will receive over the next several years as a stadium host for next year's Super Bowl, the World Cup in 2026, and the Olympics in 2028, all of this should prove to be a huge positive for them, which will attract even more new customers. So there's a lot of positives working in SoFi's favor right now. And I think something else important to note is that a lockout expiration hasn't been one of them. Insiders allowed to sell stocks since late June held SoFi with a decline that's gone from simple profit taking to a larger and pattern damaging correction for a lot of investors out there. So I think the main question people are wondering is SoFi a buy right now, especially after the huge correction? And I would say yes. I think anything in the $15 price range is a definite buy, as 15 seems to be a pretty strong support level for SoFi. However, if this stock were to dip into the $14 range and even lower, that's when I would say that this is a strong buy. And as always, be careful and dollar cost average into this one. And I think in the long term, SoFi is going to be a winner. And that's the video I have for you guys today. Thanks as always for listening, and I'll see you next time.